What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about the best financial sector ETF. This is the 5th video in a series about the best sector ETFs in each of the 11 sectors of the stock market. Today's sector is, of course, the financial sector, and you might be asking yourself, why would someone want to invest in a certain sector? Of course, everyone's got their own investment style, but there are many different reasons why someone might want to do this. It could range from maybe wanting to have exposure to financials because you think the sector is going to do better than the overall market. Maybe you think the financial sector has cheap stocks right now, so you like it fundamentally. Maybe you think there's going to be good growth going forward, or maybe you even like it technically, like you like how the chart looks. Again, there's a lot of different reasons why someone might choose to do this, but let's go ahead and take a look at how the financial sector has done recently. Here we have a handy graphic that shows us how these sectors have performed. Taking a look at the year to date for the financial sector in blue here, you can see there was a 25.7% return this year so far for the financial sector. Now, if you look at the S&P 500, it's only returned 15.3%. Comparatively, the financial sector has done much better this year so far. But if you look back to, for example, 2020, the financial sector did worse than the S&P 500 with a negative 1.7% return versus an 18.4% return. As you can see, if you overweighted financials this year, so far year to date, it would have been a good decision. So the next question is, what is the best financial sector ETF? So let's go ahead and get started. So we're going over 5 different financial sector ETFs in this video. We're going to find out which is the best one. The first one we're going over, Financial Select Sector Spider Fund, ticker symbol XLF. Next we have the Fidelity MSCI Financials Index ETF FNCL. Next we have the Vanguard Financials Index Fund ETF Shares VFH. Then we have the First Trust Financials AlphaDEX Fund, FXO. And finally, we have the Invesco S&P 500 Equal Weight Financials ETF, RYF. Here we have a comparison of the 5 different ETFs. Now, familiarize yourself with this real quick. This is the ticker symbol XLF. This is a column, so this is all XLF. This is FNCL, VFH, and so on. Let's go down first. The first thing I want to take a look at is the expense ratio of these different ETFs. Our first ETF is XLF. XLF is the Financial Select Sector Spider Fund. It has a 0.12% expense ratio. It's a cheap fund. We have FNCL, even cheaper at 0.084%. We have VFH at 0.10%. Coming in at the higher expense areas, FXO at 0.62, RYF at 0.40. If you've watched any of my videos, you know the first thing I'm going to do is I'm going to say, do these two justify their expenses somehow? Basically, do they have crazy returns and do they do something interesting that these haven't been able to do? So we're going to take a look, but likely these probably won't hold up. The way these ETFs are weighted are an important factor to consider when you're looking at ETFs. So these are all market cap weighted, the first 3. The cheaper of the funds are market cap weighted. FXO is called a tiered, so it will group the stocks a certain way. Could be equal, could be market cap style, but then there'll be some other factor that they use to like figure out the weightings of the stocks. It could be like, price to books, price to earnings. They might have their own internal algorithmic way of doing it. Or you have the equally weighted ETF here, RYF, which just means that all of the stocks should hold the same weighting inside the portfolio. The next thing we want to take a look at are yields. You may be a yield investor. You may want yield. You may like dividends. You might like yield. You might like income. First, we're going to take a look here at the distribution yield for XLF. We have a 1.50, FNCL with 1.61, VFH with a 1.78. That's a good one. FXO at 1.69 and RYF with 1.49. So what do we first kind of look at here? Well, is VFH with a nice yield comparatively on this thing, do they also have good returns to match the fact that their yield's a little bit higher? So that's something we want to kind of take a look at and consider. Fundamentally speaking, what's going on in these ETFs? Well, we have price to earnings here, and so basically you're just kind of saying which of these is like paying more for earnings, which is paying less. FXO is actually paying the least for earnings with an 8.6 average PE ratio for the stocks in the ETF. They also have the lowest price to book. So FXO is kind of probably investing in more potentially value stocks. We have the Morningstar rankings here. XLF with a 5-year rating of a 4-star 5-year rating. We have FNCL with a 4-star, VFH with a 4-star, FXO 4-star, RYF 4-star. So they're all 4-star rated 5-year funds. Unfortunately, FNCL doesn't have a 10-year rating here, but the others do. So the highest rated of these is RYF in the 10 years, with VFH and XLF coming in kind of second here with 2 4-star ratings in the 10 years, so that's pretty good too. Don't have a specific one yet that I'm thinking of, so let's continue on to the returns. Let's focus first on the 5-year returns here. So XLF with a 17.62% 5-year return. It's actually got the second highest. The highest is RYF. We can see the 10-year returns of all of these funds except for FNCL. And in this case, we have the second highest is XLF, and again, the highest is RYF. Taking a look at the holdings of the ETFs, are some of them more concentrated or are they more diversified? So XLF, 66 stocks, maybe a little bit more concentrated. FNCL, 387, way more diversified. VFH, way more diversified. FXO, a little bit more concentrated, but still pretty diversified. And RYH, a little bit more concentrated. How big are the companies inside these portfolios? Well, for example, XLF has 33.18% in giant companies. FNCL has 24%. VFH has 24%. And then FXO and RYF have a lower amount in the giant companies. So really, XLF is going to be more weighted towards the bigger companies in the financial sector. FNCL does have a little bit small and micro in there, along with VFH. And then if you have something like FXO, you're actually going to get a lot of small inside that as well. Next, I want to see the top 10 holdings of these different ETFs. So Berkshire Hathaway and XLF, FNCL, JP Morgan, VFH, JP Morgan, FXO, Blackstone, and then RYF, SVB Financial Group. But of course, RYF is equally weighted, so these are all going to be very similar weightings. Like many sector ETFs, you're going to see a lot of overlapping companies in here. Berkshire Hathaway's and XLF, FNCL, VFH. So of course, these first 3 ETFs are more similar to the sector and they really have more similar weightings. So those are the different companies inside of these different ETFs. Now the next question, of course, what is the best sector ETF for the financial sector? This is probably one of the harder ones I've actually done. So the thing with this one is RYF looks like a really good fund. Now it's equally weighted. Do I really care about having an equally weighted fund over a market cap weighted fund? I don't have an opinion on that, but you might think that it's better right now to have an equally weighted fund if you think the larger companies, let's say, inside the sector aren't going to do as well over the next, let's say, few years. Maybe you think they're overvalued or something like that. An equally weighted fund could do a lot better, potentially. And if we take a look at the returns of RYF, it's been one of the best performing and probably the best performing over the 10-year, over the 5-year, and over the 3-year. The main problem with RYF is the expense ratio, coming in at a 0.40% expense ratio, whereas if we went with like a VFH, for example, it's only 0.10%. So, it's a lot more relatively speaking. But I think my decision is that RYF really is probably a contender to be tied with the top other ETF on this, which is the other one I'm going to pick, which is XLF. XLF has a 0.12% expense ratio, so it's very low. It has the second highest return over the 10-year and the second highest return over the 5-year. So that's what I'm going to do. I'm going to go ahead and I'm going to say XLF tied with RYF if you're okay with the higher expense ratio. So let's take a look at how XLF and RYF have done versus the S&P 500. So here we have VOO in light blue, which is the S&P 500, and you can see it definitely outperformed the other two, RYF and XLF. RYF doing slightly better than XLF over the 5-year time horizon that I have up here. Let's go ahead and now take a look at the technicals for XLF. So from about October of 2020 until about June of 2021, the XLF ETF was in an uptrend channel. It broke down through this uptrend channel early June, and then it consolidated for a few months. It then tested this resistance line twice at around 38. And then around a month later, it finally broke through that resistance line, and now it is acting as support. Zooming in to see this a little bit better, what we can see is that RSI is looking okay now. It's turning back up, and it's possible this kind of goes back into the oversold territory, which would mean that this would keep going up, but that's not for certain. But what I do also like is the fact that the RSI is starting to decline closer towards the signal line, which might be a good thing. If both of these together have positive indications, it could be good for this sector ETF. So that's all we have for this video. This was our first sector ETF that actually had a tie. I want to say thank you for watching, of course. Hit that like button if you enjoyed this video, and subscribe to see future videos like this. Also, on the end screen, there is a video coming up. You should probably just click that thing. Click it. It's coming up right now.